I'm very excited to be joined by Paul Ghezzi, CEO at Kontrol Technologies, ticker KNR. Paul, to you and the team recently completing your uplisting to NEO and following up on what looks to be a really busy quarter for you. Great to have you and look forward to hearing a few updates with our audience. Welcome and thank you for joining us.
Yeah, thanks, Eric. Thanks for being the host today, and thanks for having us.
Absolute pleasure. Now, Paul, among the many things I've noticed about you and the team over the years, because we've certainly known you for a long time now, you have a pretty loyal and active group of shareholders online, hopefully many of them with us today, paired with what I think is a really interesting macro shift in markets towards ESG, clean tech focused companies. And you and the Kontrol Tech team have really come into your own, I think, over the last 12 to 18 months. But for those of you in the audience who might just be hearing about Kontrol Technologies for the first time, Paul, can you give us a bit of an industry overview, forecast, road ahead, and a bit of a primer on Kontrol?
Sure. So we are in the smart building technology sector, and that's broadly defined as what takes place in the building between the grid. And so if you think about really as a macro theme and overview, I would say the last 15 years have been about putting renewable energy assets onto the grid. That's really been the hot market. And we saw a trend developing a number of years ago where, if you do that, but buildings are less efficient and consuming a lot of energy, there's a no-win situation there. So we operate between the building and the grid. And the real concept is this: buildings lack the infrastructure and the technology, the automation to be more efficient. So they're wasteful in energy, and buildings waste about 70 billion in North America alone of energy use. And they cause about 40% of greenhouse gas emissions. And interesting stat, in the next 10 years, buildings will consume about half the world's energy. So really, if we're not addressing the building market as an energy market, we're really missing a big opportunity in terms of GHG and climate change. And I think what you're seeing out of the US is, the Biden infrastructure plan really has a big emphasis on buildings. And so we would say the trend is our friend right now, for sure.
I like it. And can you give us a bit of a view on kind of the industry and the footprint itself? How's your business focused between Canada, US, North America, generally speaking? Where do you see most of your business coming from?
Yeah, it's quite an interesting industry because what you have is a bunch of mega caps at the top of the food chain. So, names like Honeywell, Johnson Controls, Rockwell Automation, large established global companies. And you really don't have many mid caps, and there's maybe a handful of small caps. The real market, the way the market operates, is it's private and regional. And that plays to our advantage because we're consolidating in that market. So typically we don't come up against a mega cap as a competitor. We come up against a regional player. And I would say the next big part of the industry, the evolution is, the industry has been very siloed for the last 15 years. We're using a vertical integration approach where when we have a customer, not only are we looking to grow into their portfolio, we're looking to take more market share from the building. So that's a unified platform, a vertical integration approach to building up our customer base. And we're seeing a lot of traction. And, we had a great Q2. And part of that was because we're offering more services to the same customers, right? So vertical integration, and we're growing that customer base through organic and acquisition.
I like it. And you start seeing, you guys start to show up on the grid for a number of different partners along the way. But, for folks who perhaps aren't as familiar, you mentioned a few of your competitors, the vertical integration strategy. What in fact does make Kontrol stand out from the competition overall?
Early on, we determined that vertical integration was the key, and that wasn't very popular 6 or 7 years ago. So the siloed approach of, I get a little piece of this building through my software, and then someone else does the service, and then someone else does the automation project is really how the industry has been built. We started breaking those barriers down, day one. And initially people said it's not going to work because, the market's too siloed. But what we're finding now is customers want a unified solution. So what that means is if we install our software and that software produces data and analytics, what is that going to mean for me in terms of an automation project for an improvement? And then what is that going to mean for me in terms of an overall return? And then if I'm reducing energy, what's my impact on my GHG and my sustainability? So as we start to answer all those questions for our customers, what that really means is more revenue touch points, more sale touch points. And that unified solution is what we're doing in our market, and some of our larger global competitors are doing. But I would say it makes us unique in our market and our size and scale. And it's done very well for us in terms of growing our revenue.
I like that. You see that show up kind of in our personal lives as well. Like everybody's trying to find one platform to use and
Right.
leverage, whether it's lights or your air conditioning or all these things that can make your home smarter and more intelligent. But seeing that
Right.
show up obviously in the business world, obviously a compelling offering for you and the team.
Yeah, so I would say smart homes went first, right? And everyone is really familiar with that approach. And you give a great example. Am I going to use 10 different apps to run, 10 different aspects of my home? I'd rather have a unified platform. So that same theme is really running through commercial buildings. And in fact, Morgan Stanley refers to this time as the commercial building super cycle. And it's really driven by all these factors: rising energy costs, the need for sustainability, the need for new infrastructure. And then the way we've taken our approach is, if that's all true, which we believe it is, how do we unify that into one solution?
I like it. So you don't come up with this obviously in a bread box and then make all this stuff overnight. You've obviously got a very credible team, both yourself and the team around you. Can you give us a bit of a view on the group that's running the Kontrol Technology team?
So the team comes from primarily, so I'm a CPA and our CFO is a CPA. We primarily come from the M&A world, and that's where we spent most of our careers. We also come from the renewable energy and smart building sector, so we know the sector well. And our experience is really driven by, I would say, initially the private market approach, and the public market was new for us starting in 2016. So we've had to learn. When you're a small cap, you're your company and you're your stock. That kind of goes away as you get bigger, but initially that is true, right? And most CEOs I talk to in small cap space will say the same thing. So from our perspective, we had deep industry knowledge. We've learned the public markets and how to operate, and now you bring those together. And so, yeah, we've got a deep team right now.
I like it. Talk to us a little bit about strategy. And I mentioned at the onset, you guys have had a pretty busy Q2, and I saw actually a very interesting press release yesterday, I believe, on one of your product launches for BioCloud and some work you're doing with Steelcase. Give us a bit of a view on how that piles into the broader Kontrol Technologies mandate.
Sure. So Kontrol Technologies, we really started this, if you recall, we were public as Kontrol Energy. And what started to happen is, as we were dealing with customers, that broadened into emissions. And then that broadened into indoor air quality. And then kind of the next step was the BioCloud innovation, which took place last year. And BioCloud is an early viral and pathogen detection technology that was announced around this time last year, funded by the government, federal and provincial, and kind of took off for us in the market, and also really developed a new vertical. So as Kontrol Technology, we're all of those things, and hopefully more in the future with more innovation and more acquisitions. And the idea is that a building as an ecosystem is we're looking to solve all the challenges in that building. The challenge that BioCloud solves is getting people back to work through enhanced indoor air quality and viral pathogen monitoring. So that is a new niche in the market. We're certainly not the only company. We have new competitors coming up, in the US, Europe, and Asia. But it gave us that window of being a unique product. And so the Steelcase deal that we announced, most people don't know, that was 10 months in the making. And one of the challenges in the public market when you're a small cap is people want you to execute in a week on a deal like that. And so, to be honest, large organizations, they're 2.6 billion in revenue, 800 dealers, 100 years old. You're not going to do a deal in a week. So that process took quite a long time, but it started off as a great partnership. We're really looking forward to what they can do. So we've got roughly 20 BioCloud dealers right now. They've got 800. So there's a 40x on that potential just in that one partnership. So is it worth, the work of putting in the 10 months? Of course. And you just have to, you build your business and you keep going. And we're very happy that we were able to bring on that partnership.
It's an incredible one, and I can see a few of your audience members cheering you on that one as well. So congrats, obviously on the win, and certainly know what it's like to bring some large organizations into the fold. And as you said, anything worth doing usually takes a bit of time to make sure that
Yeah.
everything is set up the way it needs to be longer term. I like it. Well, since we've got the investor crowd with us a bit today, give us a bit of a view. Where are you looking? What's your forward-looking position on the business? Where are you headed? I think BioCloud fit really nicely in with kind of a broader macro environment, especially as folks went home and are now contemplating a return to the office. But what's forward-looking for you? What's next?
Sure. So, when we designed the business, we had a philosophy, and I want to share that because I think it's important. So the idea was, let's grow revenue, but not at any cost. We're going to be a high growth company. We're going to protect the P&L. So we're looking for EBITDA positive. And then we try and run a cash flow break even because we're investing in the business. And I think, that's a better model than in our case, and that this just relates to us. I'm not making an opinion on anyone else, but we don't like burning up the P&L to grow the business, because you get into this situation where, if the markets turn on you, you could be in a less desirable situation. So the idea is grow the revenue, EBITDA positive, cash flow break even, invest in technology innovation inside the business, acquire good cash flow and customers through accretive acquisition, and take that entire approach and build a much larger business. So we started the business at $1 million of revenue in August of 16 with our launch. We're going to end this year roughly at 38 million, so very high growth. And next year we're looking to double to about 65 to 70. So if I look at all that big picture, and you get there in kind of fits and starts, and it's not a perfect quarter over quarter story because we're also a project company. But if you look at that growth, we're very pleased with that. The strategy has worked well. And what BioCloud represents is internal innovation that is accretive almost from day one. So of the BioCloud innovation, we received 2.5 million in grant money from both the federal and provincial government. We invested our own capital in that, and we're already in revenue. So it's a pretty exciting time for us in terms of our opportunities. And I think we've got a really solid foundation. The last quarter kind of woke people up to our execution. And that's just the way it is in the public markets, right? You just keep executing, put your head down, work hard, and sometimes you'll be in front and sometimes you'll catch up.
I like the responsible approach, and it's something that, to your point, it takes time to build up that credibility, show the capability to deliver, and not every quarter is excellent. Some things out of your control, but being responsible with it along the way, obviously very important. Few targeted questions from our audience since they've started rolling in.
Sure.
Around BioCloud specifically, any production capacity or advisements you could put in place around that for the investor crowd?
Yeah, so we've publicly announced that there's still challenges in the supply chain, and everyone's having the same challenge, from auto manufacturer at the top end down to control. And the way we manage that is you have to work with your customers to create lead times that are reasonable. The specific challenge with BioCloud is production based, but it's also, if you think about where we started, we were pre-vaccine with our development and the government investing in us. And then the vaccines came in. And BioCloud never competes with vaccines, but the narrative became the vaccine solves everything for the broader economy, and every other form of technology that could assist in getting back to normal has no relevance. That really became the story. That's not true anymore because we recognize the limitations. And my view on this is more technology to get back to normal is better. I don't really make a claim against any other technology. But if we're going to get back to normal, back to the office, back to work, back to spaces, more technology is better. The part of the technology problem that we're solving is indoor air quality, measurement, early warning systems, and that seems to be something that is attractive, to Steelcase, and created the partnership for a global organization. So we're bullish on where we're going, and of course, as a company, you always have to manage these challenges outside of your control.
As always, it's the joy of being at the top of an organization. You get to see and tackle all of these wonderful challenges every day. One other strategy piece that I thought was interesting and actually came in as an audience question as well, around the carbon credit initiative. So can you talk to us a bit about that?
Yeah, so interestingly enough, every time we do an efficiency project in a building, we typically get a rebate from the local utility. And it's called a rebate incentive. And what that incentive is meant to do is spur the project on that wouldn't otherwise happen. That incentive rebate is backed by a certain amount of carbon credits. Those are called energy efficiency credits, or in Europe, they call them white credits. Those credits have typically been retained by the utility. So, in exchange for giving up the credit, you get a rebate. What's interesting is there's a natural arbitrage in there. And we started to ask the question a couple of years ago, well, what if we gave up the rebate and retained the carbon credit and monetized it with our customer? So it's been a 2-year journey of sorting out that process. It's quite complex because it not only does it involve the packaging of the credit, the validation, it also involves the trading and the monetizing of it. So we're going to be launching by the end of Q3, and we'll provide more details on this, how we plan to monetize those credits that exist in the utility system. Now, this is a pretty big and growing market in Europe, and Europe is typically a couple of years ahead of North America. We're excited about this innovation because it creates really a unique competitive advantage for Kontrol. You know, we've done the work, we know what to do, and if we can go to a customer and start getting them to participate in that monetization, I think it's going to accelerate some interesting things for us. So we're excited.
Absolutely. And I think we're just, to your point, starting to see some of that drive to carbon neutrality or carbon credits even being used to deliver on that outcome start to enter public markets now. So you're well ahead of the curve, it seems, as always, but glad to hear that that's on your radar. Maybe taking away from the Q&A for a small moment. So you've given us a pretty nice primer on Kontrol Technologies, some of the unique products you've built, the time, energy, effort, and thought that went into creating the Kontrol Technologies that's in front of us now. Well, as a potential investor, if I'm not in Kontrol Technologies today, why should I put my money in now? And what's kind of the longer range opportunity that you see for prospective investors looking at getting in for the first time?
Yeah, great question. So, as an investor, here's the way I think about it. Am I aligned with management? Are we going in the same direction? So we remain the largest shareholders in the business. Has the business grown over time? Do they have a track record? And if you look at our track record from inception to where we are today, I think we've executed. Can the company innovate for the future? I think, we check that box. Is it a solid share structure? No share structure is perfect. I've seen better ones, I've seen worse, but is it a solid and reasonable share structure that you can understand? I think we check that box. What's the balance sheet look like? We've reduced our debt load significantly. We've got 7 million of unsecured, not convertible debt, which basically means no dilution, good position. And I think, then you start to say, do I like in the sector? And am I interested in the sector? And so I think we check a lot of boxes. We're not perfect. But I would say those are the things that I look at as an investor. And then you make a decision of your timeline. And I would say our timeline is not 3 months or 6 months, right? So we're building this business for 10 years, 15 years. But that's up to every investor to decide what's their timeline as a shareholder or where they fit in that life cycle.
Of course. And that long-term vision and mission, maybe perhaps the interesting part that leads into another question around your recent graduation and uplisting to NEO. Can you talk to the group a little bit about that decision, pathway, and plan, and what that really means for you?
Yeah, it's interesting. So most people don't know. We were talking for about 3 years, right? Kind of dating. And
funny how that works there.
So I want to share the story of my skepticism because I think it's healthy to be a skeptic. And when people are skeptical of Kontrol, I welcome it, right? That's part of life. But we weren't sure you were the right exchange. There's other exchanges and why you and what makes you guys unique and why, and so the more we learned about you, what was really appealing to me, number one, you're a senior listing, which means you're a graduation from where we are. And it's not to disparage where we were. It just means I'm looking to graduate to the next level. You're well received in the US, which is interesting. So institutionally, you're well received. You've got institutional ownership. But then what really became intriguing to me is I want a level playing field for every investor. And sometimes that doesn't happen in the market, right? And we know why that is. We don't have to get into that. But what you guys do with the high frequency trading and the speed bumps and really creating that level playing field was so appealing to me because I think, the average investor needs every kind of advantage they need to level the playing field, and I like that. So take all the other things, you being the NASDAQ of the North, it became a very exciting graduation for us. And we're very pleased, we're very happy with the relationship, and we want to be successful together. Hopefully that covers it.
Oh, that's beautiful. 3 years of history, indeed, to get to the point where we could work together, but a long future, I think, in front of us as your listing exchange partner here in Canada.
Right.
And we know, obviously, the name of the game is reach as many investors in the most seamless and straightforward way as possible.
So maybe I know I'm getting questions. Maybe I can ask you a question, because I think, shareholders really don't understand how much effort you guys put into the level playing field. And so maybe talk to us about the speed bump and the level playing field and how you do it, because I think it's really important.
For sure. Now, there's two very different ways that we try to do that in our trading models. When you think about investors that are buying actively in the market, so they're going to take out a bid or an offer with a market order or a very aggressively priced limit order. If you're a natural investor, we don't slow you down. You trade right away, seamless access, no stops. But if you're an active high frequency trader or proprietary trader, we actually slow them down with a randomized speed bump. And you might chuckle a little bit at the timing. It's a random delay of 3 to 9 milliseconds. But I can assure you.
No, I get it. Trust me.
3 to 9 milliseconds in a crowd that is chasing nanos is a pretty long period of time. So that's one way. If you're like most long-term investors, you might book your limits. So you'll put an order that'll sit out in the market and wait till it hits another price, and then you'll perhaps trade. There again, we have another innovation in our market where we have identified every trader ID and, in effect, every desk on the street that would trade with Neo, and where their orders originate from a retail or a long-term investor. They actually have queue priority, which means it's no longer the classical exchange market model where it's first in, first out, and trade based on time you got in the book. In fact, retail and natural investors can jump the queue and trade ahead of those who might have gotten to that price level first. So there again, we're trying to really prioritize natural investors to actually trade with one another. And if they can't do that, or there's nobody available at that price, then we bring in other forms of liquidity, whether it's market makers, high frequency traders, other institutional investors, funds, and whatnot. That's to be very clear. We're not anti-HFT as an organization. We are seeking to just bring a level playing field for the investment audience. And for us, this was two of the ways we've chosen to do that.
That was, not the only decision, but one of the critical ones for us was understanding that and why that's important, and why that benefits our shareholder base.
Certainly. And I appreciate the question. The one thing that's maybe nuanced, and actually something that hopefully your investor base has noticed since moving, it's actually also about visibility of information to investors. And being able to showcase more of that quote, more volume, more information to discounts, to advisors, to do-it-yourselfers. Something that's been seeing folks like you guys make those kinds of moves and come over to Neo, because we're actually putting more information in real time out into investors' hands.
That's great. Thank you.
My pleasure. Back to you though, because we're getting a few other Q&As coming into the inbox along the way, and we are short on time today as well. Looking at the Kontrol story and looking at Canada and Europe as the balance of an execution, strong financial management, marketing, IR promotion, can you talk about that next phase of K&R will continue into retail, family offices, institutions? How are you targeting that user base with your plans going forward?
Okay, so we have made a concerted effort to move our IR to the US, specifically to grow that market. And one of the things I didn't understand fully when I first started my public journey was just the size of the potential market in the US in terms of brokers, dealers, investment bankers. The quantum is significantly larger, and so we've made that concerted effort to move into the US, and also from the US launch into Europe. So as again, to the point I made earlier, as a small cap, you're running your business and hopefully executing on your business. The other business is the business of the public company. And that's something that we've learned over the years, to spend the right amount of time on the right amount of resources, make the right connections. So today I'm at the Sidoti conference most of the day. I've got a few others coming up. I do spend a lot of time with institutional investors, and you're constantly telling the story, meeting new folks and broadening that. So it's something we do take serious, and something we're much improved at now, I would say, since our initial days being public.
Well, it takes time. Being a public company, and in fact, maintaining IR is in effect a separate business line for most, and it's not the easiest thing to keep front and center when trying to also execute upon the business. And certainly applaud the effort and the engagement of an outside firm to help deliver that. And those one of our partners on the grid with the MZ crew. So
Right.
In great hands, certainly. Managing time here a bit, Paul. We've been through a pretty nice swatch of the company origins, where you were, where you are, where you're headed. With kind of 3 minutes on the grid to go, we haven't maybe covered everything off that you've wanted to mention, but if there was one thing you could leave with our users and investors on screen today that we didn't talk about, what would that be?
Sure. So a couple things. So sector-wise, we feel we're in the right sector to make a difference and have a big impact on the world. And it's the reason why we're not in another industry. We really love our industry. We think our industry has the potential to be a game changer in terms of energy, climate change, sustainability. So that's, if that attracts you, then we're in the right place. In terms of a company, we're focused on high revenue growth, EBIT positive, and running a business with financial discipline, but scaling that business organically and by acquisition. By innovation, we're very excited about the innovation we're creating, including Kontrol BioCloud and hopefully very soon Kontrol Carbon Credits. So I think if you like all those things, then you decide, do I want to invest with management? Are they shareholders like me, and where do they want to take the business? And I think that's really our story in a nutshell.
I love it, and certainly thinking forward, and as always, seem very well positioned with where the market is going. It seems like you're already well positioned to take advantage of that in the months and years ahead. Paul, I want to be mindful of your time. Thank you very much, obviously, for joining us today and sharing your view from the chair at Kontrol Technologies. Fundamentally different way of thinking about the space, and it's actually a true pleasure to be able to spend the time and chat with you a bit about the mission, vision, plans looking forward, and how you're thinking about the business in the future. I certainly appreciate your time. I know our audience does as well, and for those of you that dropped questions into the question box we won't be able to tackle, leave us your name, drop us an email, hit us on Twitter, LinkedIn. We'll make sure we can connect the dots with Paul from here. Paul, thank you very much for taking the time out today from the conference to speak with us.
Yeah, thank you so much. Good to be with you. Thanks.
Absolutely, our pleasure. To our audience, this is Neo and Kontrol Technologies signing off for today. Thank you very much and have a great one.
Thank you.